Hello, everyone, and welcome to a special episode of Nucleus195 Spotlight. Today we have Brendan McCarthy from Column E. Thanks for being with us today, Brendan.
Hey, thank you for having me.
So your weekly blog's coming out very shortly. Do you want to give us a quick overview about that?
Sure. So one of the themes that we've been talking about, Column E, is the evolution of the cycle. So basically from domestic stocks to global stocks. And one of the signals that was about to take place was in May, when Biden broke out, if you will, against Trump in terms of the polls. What you saw was international markets, particularly Asian markets, get excited and start to move. That indication to us was, well, you know what, the global system is now finally waking up. It's been sort of hampered by conflict, trade wars, and whatnot. This has led to we're starting to see more international markets do better, like the Nikkei. I believe we spoke about that before, and the Nikkei is starting to get a little outperformance versus the S&P 500. This is so-called the Biden bounce. It was coined by a different advisor on the street recently, but I think the Biden bounce has been evolving now for several months, and now you have traders rolling into this trade, running over the shorts, and really pushing it as we get closer and closer to the election. Can the Biden bounce continue beyond the Biden win that appears possible? Tough to say, but right now, that I think the global economy turning back on, even with COVID ripping through it again still, I think that's what you're seeing. I think that's what's driving stocks. It might be driving U.S. markets a bit too much in terms of how extreme the valuation has been. The option data is getting kind of crazy again in the short term. But I believe the Biden bounce is, to coin a phrase from somebody earlier last week, is in play based on the global economy turning on.
Okay, well, you've also got earnings seasons kicking off this week. I'm interested in the banks. You got JP Morgan, Bank of America, Wells Fargo, Morgan Stanley all reporting. The banking sector is the second worst performing sector behind energy in 2020. What do you think we can hear from them?
So the banks have been dead money for a while, if you will. The chart won't rally, the stock market goes up, and the banks say, all right, keep going without us. What you're seeing, I believe, is just investors are afraid what's going to happen around the corner with REITs and individuals who are the waves of layoffs that occurred at the beginning of this past month. I mean, if the banks suffer when money's going out the door, the banks have less from the retail side. If REITs become a problem, then it's no longer the CMBS markets that's dealing with it. It's more of the bank dealing with it directly, as they have to negotiate better terms with the investors. So I think that the reason for the bank's lack of performance is all these risks being handed to them. Has any of them materially occurred? Has the REIT businesses gone down? No. In fact, maybe they're getting a little better. But there is a lot of risk and stress there. So that sort of made the whole sector dead money. However, it is cheap. I mean, you look at, for example, Bank of America's PE relative to its earnings over the last 10 years. It's just been lagging. It's been following it behind. Its earnings continue to go up, but the amount of risk being taken in the stock has not risen commensurately. But it looks like they're finally waking up. Like Wells Fargo looked like death's door. It just fell. It looked like it was going to go down to 20, and all of a sudden the buyers came in this past week. You're probably seeing that fill into other banks, like Bank of America, for example. It took 23 and it's now on the rise to 26. You'll probably find trading and asset fees moving up for anybody who has a broker. The number could be better. I don't, in terms of the bond business, that usually hurts things, but we'll see. The Bank of America, though, particularly, if it can break through 26, it might be on the run to $30, and maybe the earnings report, their upcoming earnings report, will be a key driver.
Okay. And one of the other big events this week, well, there's quite a few, obviously, with earnings week, but Apple is expected to announce its iPhone 12 tomorrow. The stock's up more than 100% over the last 12 months. What do you think we can see in the back of the announcement? Is a lot of this move already priced in?
So momentum, Apple, when the market bottomed in September, Apple bottomed at 105 and it fell through it. And I remember writing about it, like, this is interesting. It's actually turning on 105. ever since it did that, it hit 115. I think it's at 120 in the pre-market. It looks like it wants to go higher, and I believe investors are pricing in a good earnings report and a good product. Now, I can tell you from my own kids' perspective, the new iOS on the phones has been an enormous hit in my house. If they were to come up with, if the phones and their products continue to be hits with these younger kids, you may have just adopted a younger generation of buyers into the phones. With that said, the stock is trading close. I mean, back in August, it traded all the way up to 40 times earnings. It rejected that badly and lost 25%. It's now trying to catch up to its EPS again after lagging it. I could see it getting over 130, but I don't know how much more it can run from there, because it lagged its multiple for years and years and years, and it finally caught up to it in August, and then rejected it so resoundingly. So if earnings per share continue to rise, Apple should continue to rise, but I don't know if it's 130 may cap it in the short term.
Okay, and then finally, one last thing here. Amazon Prime Day is here. It's on the 13th and 14th. Target and Best Buy also have events this week. I've seen estimates out there for Amazon for 9.9 billion in sales globally. That's a 60% increase on last year. With lockdowns in Europe, maybe that's going to be even a bigger number. But like Apple, is a lot of this factored into the price already?
So Amazon sort of went sideways for a bit. It fell down to about 2,900, like Apple did to 105. I think Amazon will do very well this fall. I still believe that with COVID still spreading, and it is spreading more aggressively now in the United States again. Granted, the number and the hospitals are filling up. Anything like that is a benefit to Amazon. I can't tell you how many boxes still show up at my front door from Amazon. Now, this should drive. I'm not the only buyer of Amazon goods, of course, but there's many. The Amazon buyers in my neighborhood is still large. Sales should continue to rip, I think. The stock itself is trading like it. So 3,200 up to 3,600 is now where it sits in terms of its range. Can it make a new all-time new high? I don't know. I think it's sort of like, it probably has more upside to 3,600, whereas Apple has less upside to 130 in terms of percentage. But I think Amazon's still poised to hold leadership. The new administration might have a different opinion on that. With the tech report that hit Congress recently, they might want to start breaking these guys up, which actually is probably better. You'll probably get more value out of them, but that might slow gains into year end. I mean, the stock might get up to 3,600. Thank you very much to Prime Days, which is the new Black Friday, right?
Yeah.
That's what they were all saying this week. The retail sales in November don't matter anymore. It's what occurs in October. We're all going to buy our Christmas gifts. Anywho, so that's where I think Amazon probably can run further because it got over 3,200. It's probably indicating that better things are coming.
Great. Listen, Brendan, thank you very much for your time today. Good luck trading out there, and we'll speak to you again soon.
Thank you very much for having me.
And for everyone watching, if you want to see get access to any content, research content, investment ideas, go to nucleus195.com. Thanks for watching.
Thank you.